Thank you everyone for joining us today. Today we're here to talk about a wonderful opportunity available to nonprofits regarding the Paycheck Protection Program. I am Melanie Schmidt with Timpano Consulting, and I'm a strategist and facilitator of progress for mission-driven organizations and entities responding to change and navigating transitions. We'll be featuring for our advisors today Darian Luckett with IFF, a community development financial institution that strengthens nonprofits in the communities they serve. Also, Jeff Femrite and Melissa Scholz are here with as attorneys with Scholz Nonprofit Law, and Salli Martyniak is here as a nonprofit advocate and visionary with Community Reimagined. And all available to you as advisors as we work through some of the exciting and fast-paced developments around the SBA funding and the Paycheck Protection Program specifically. For our flow today, we'll start with just what you can expect from the call. A reminder to please use the chat feature as we do welcome your questions. That is part of what will deliver great meaning in this conversation. Then Darian will talk with us about IFF's particular opportunity for nonprofits who have not yet applied for the Paycheck Protection Program but would like to do so. Then we'll actually be going step by step through the application itself as an opportunity for you to ask section by section what are clarifications on language or other things that you were curious, what am I supposed to put in that box, or how am I supposed to answer that question, as well as working through a very helpful checklist that Scholz Nonprofit has put together that gives you materials for how to get the lender to yes. And again, critical to all of this will be your questions, and we'll do our best to address that. Again, knowing things are changing very quickly and rapidly, so the information that we're sharing here is current as of April 22nd, 2020 at approximately 11:37 a.m. Central Time. And so with that, want to start us off with just a moment to center and find our way into this conversation with some words from Ralph Marston. And very short and brief, but what you do today can improve all your tomorrows. And that's what we're hoping for. So with that, Darian, if we might just turn it right over to you to share information, a bit of your background, as well as the opportunity that's available through IFF.
Great, thanks a lot. Good morning, everyone. I just want to thank Salli and Melissa and Melanie, Jeff for putting together this convening. It just really shows their level of commitment and passion for the nonprofit sector, and most importantly for the community, making sure that we, when I say we, collectively try to get our fair share of what's being offered to our small businesses as well as the nonprofit organizations here in the state of Wisconsin. Again, my name is Darian. I'm the Director of Lending for IFF. IFF is a community development financial institution headquartered out of Chicago. However, we service Midwest, being in 7 different states throughout the Midwest. And so basically how we got involved with the SBA, and I'm just going to say PPP program or P3 program. We're not a SBA approved lender, but we have clients, borrowers, other nonprofit organizations that's not borrowers that I know personally, different people. They had a very hard, they had a very tough time trying to apply for the PPP program. And so they were calling us, they were calling IFF, calling me, and so our CEO and president decided, you know what, we need to get involved because nonprofit organizations are being sidelined, and we know that you guys are the ones that's truly doing the awesome work throughout various communities, and a lot of people depend on you guys to help them have a better life regardless of what capacity you guys serve. And so we contacted another CDFI organization called Community Reinvestment Fund USA, who we've partnered with on various type of other collaborations throughout the years to say, hey, you know, we have a community of clients throughout the Midwest who's been sidelined. Can we quickly put something in place to give them an avenue to be able to truly apply, not just fill out a form and that form going to a black hole and there's no one that you can connect with, but truly get some human interaction. And so we knew that we're going to be on the back end of the first round, but we wanted to try to position ourselves to be able to help clients and borrowers, friends for the second round. And so we launched late last week. I think within the first 4 hours, we had 60 people inquire about our program. And as of this morning, when we last checked, we have about between 250, 275 people that we're working with right now to prep them, to get them prepared, that when this next round opens up in the next 24 to 36 hours, then those applications can be submitted directly to the SBA. So we're just trying to take a more proactive approach. So Melanie, if you could put up the IFF screen for me. Basically, you do not have to be an IFF borrower to apply for this program. Again, what you would do is go to our website, iff.org, and you would fill out an intake form. The intake form is really is something that's going to generate an email to our in-house person to say, hey, we have someone we have an organization that's interested in applying for the PPP program. From there, you guys will be assigned, that borrower will be assigned to someone internally, such as myself. Any loans that come through Wisconsin or Iowa will be assigned to me. I will make a phone call to you just to go over, just again, to give you that first level of human touch, understanding that, I'm here to kind of walk by your side during this process. We talked a little bit about how do you calculate the amount of loan that you can qualify for. I don't know how familiar you guys are with the loan calculator, but once you can get up to 2.5 times your monthly payroll, you can qualify up to 2.5 times your monthly payroll, and there's some documentation that will help you back into how much your annual payroll has been over the last 12 months. So we want to make sure that you get that right, because that's going to be the genesis of how much is going to be forgiven and what are those funds be, because this loan can be forgiven up to 75% if 75% of the dollars used is spent on payroll or payroll expenses. One would say, what are payroll expenses? Anything that that you pay your payroll company, if you use a third-party vendor such as Paychecks or ADP. If your organization fund retirement, a portion of a employee retirement, if any cost that you take on as far as health benefits, vacation, and if you use an outside service, typically your monthly statement would give you a year-to-date and a month-to-date figure for you to be able to pull those numbers, or you may have an internal person that can pull those numbers if you don't have them at your fingertips. But 75% goes towards payroll. The other 25% will go towards any type of other expenses that's related to your business. Rent, utilities, any type of interest payments. If you own a building, if you own your facilities, you can pay 8 weeks worth of interest that's on your loan. Any interest on your organization, any debts that you may have, as long as it was before And there are some dates, I want to say February or before this program came out. Anything after the program, once the program was launched, would not qualify.
One of the questions, and I think partly it's that when you hear, particularly you mentioned, you had a smaller number of applicants in the queue, and then it blossomed to 250 to 275. I think one of the questions that's come in, and also certainly natural curiosity, is if there are already backlogged applications or there are already that number in the queue, wouldn't those be processed before new applications? If so, is that fundamentally going to use up the money before any new applications even get into the mix?
Sure. And that's a great question. Right now, this is like you all know is a big race. And so if you went to a traditional bank, they're not pre-processing loans. Once that first pool of money dried up, they basically put everyone else that was in their queue. They basically said, the money is dried up and we'll get back to you. Or they may not have said anything. The difference between our process is we're moving forward. Actually, this time that we're in right now, this holding pattern has given us time to catch up and to actually work with our clients to make sure that they're prepared. Because once I review the file, then, or the first level of reviewers, then that file gets sent to CRF saying we're validated that all the information that's inputted, we validated that the loan amount is correct and all the supporting documentation that's needed is there. Then once they touch that file, they're basically sending it straight on to the SBA once the new funds are released. So in our process, things keep moving. In the other process, things is at a halt. Now, one thing also to keep in mind is everyone that's in queue, they're not following through. There's outstanding documentation that's out there that they have yet to fulfill. So once they get to our level, we're moving those who's proactively want to move forward. So it's better to get everything in, right away, because yes, you can move up in our queue because again, some people are not taking advantage of following through what's needed. And so, yeah, it is a race, but those who are very hungry and diligent are the ones that's going to get moved on to the SBA.
And so would it be fair to say that you believe that, in fact, there would be a potential positive return on investment, if you will, for going through the steps of preparing your application, creating the package, and getting something in the queue, even if there are 250 other applicants who are already moving through?
Well, remember, in this particular round, there's some set-asides that were put in place. So CDFI type organization, they set aside $30 million that these small businesses and all these other people that gobble up the first tranche of monies, they can't get to. So you would have nonprofit organizations and those smaller nonprofit organizations and other small business organizations, minority-owned business, things of that nature. There's a set aside that now the SBA are really going to have to look and make sure that that each loan are put in certain categories. And once those other pools of monies are gone and nonprofit dollars are still there, they can't be touched, only for nonprofit and some of the smaller businesses and minority-owned businesses. So that's the difference between this go-around and next go-around, is that there's some pools set aside for, especially for the nonprofit world. So yes, you want to move forward and get in queue.
We did have a question come in, and I'm wondering if I mispronounce names, my apologies completely. You can correct me if you're willing to then go on voice. But Lahoma, you had a question that you brought in, and I'm wondering if you'd be willing to unmute and ask that so we had some context for you.
Yes,
Thank
I'm
you.
asking in the from the stance of being a church entity where the pastor is paid as a nonprofit employee, which in turn cause with not being able to have services, has depleted his income as well. And I'm just trying to see what would the process I would need to take to make sure that the church is funded, as well as, maybe some type of monies for, to pay the pastor.
Right. That's a good question. And I think that's one that I may need to follow up with you as relates to the faith-based sector of the nonprofit field. I'm not 100% sure. And so if you don't mind, can I follow up with you on that after this call?
Darian, they updated the guidance and came out and said, well, usually SBA can't fund faith-based groups. They can in this case now. Okay.
All right. So, yeah. So I would say, move forward with, again, as long as, and of course you have your payroll information and all that stuff. And it can go beyond, just the pastor. If there's anyone else on the payroll of the church, should be able to qualify, if since they've opened it up for faith-based. Unmute.
So what do I do?
Pardon me? So you would go to get things started, you would go to anyone that would want to move forward with, start off by going to iff.org. And that's the screen that Melanie had put up earlier. And then you'll move forward with the process.
And we'll include those links with a recording of this that is sent out afterward. We've had a couple of questions also come in, and it has to do a bit with, we've already applied with someone. Will they have access to the set-asides, or is that specifically money that will be set aside for organizations like IFF? So that's kind of one of the questions. And then similarly, if you've already completed an application with someone else, should or could they apply through IFF as well?
Right.
Should they go through multiple sources?
No, definitely do not go through multiple sources. It's been clearly stated that multiple applications, if they hit the SBA system, they're flagged and they'll be disqualified. And so, and that's a question that keeps coming up about if we've already applied or we just did an inquiry form, no one has gotten back to us. That's really touchy, because it's kind of like the concept, back in college in statistics, they say if you're waiting in a line in a queue and you think that there's a shorter line, should I leave this line and go to the shorter line? And it comes out to typically it's better just to stay in one queue and to go through than to jump queues, because, there are some limitations on my side also, and I can't forecast and tell you just because things may be a little shorter here that you would get through, because again, we're just one part of the big picture as it relates to CRF, but the difference between us and other affiliates that's working with CRF, we've taken on a part of the pre-screen from them. So when our clients hit their queue, we pretty much have done the first level of review for them, and they basically said, we would accept your word as validate as a means to be able to move your clients through quicker. So there's some things, but again, they have 9 to 10 other affiliates that's feeding into them as well. So I would say if you're working with the organization, to continue to work with them. Definitely, if your application, if you submitted documentation, you've gone beyond an inquiry phase and you uploaded documentation into someone else's portal, or definitely stay with them, because you're basically probably a lot closer than if you come over to my side. There was another question kind of as far as the set, you had a first part to to the question, Melanie. Can you repeat that the first couple of sentences?
I think the question was, if someone's a nonprofit and they've already applied to their community bank, does this set aside apply because you're a nonprofit, or is it just for CDFI?
It's not so much for the bank as much as it is for the entity that's applying for the loan. And so a nonprofit organization that's applying through a bank, remember, well, I should say remember, one part that you don't know about this is the backside process. There's a form that the organization, the financial institution, they have to fill out some information, demographics on the borrower. And so once they check off that the entity is a nonprofit, then it would be automatically tagged for the nonprofit pool. So there, so there is some forms on the institution backside that's where things are properly categorized. So it doesn't matter who you apply with, the same rules apply across the board. So that 30 million set aside is 30 million for CDFI organizations, because we're just the entity or the mechanism, the tool organization that's being used to get the applications to the SBA. So it doesn't matter who you apply with.
Great, thank you for that. And this is a bit of a question outside of the PPP specifically, but want to just make a quick space for it. Darian, if you can just confirm if there are organizations that are not currently an IFF borrower, but they would like to borrow directly from IFF for a project outside of the Paycheck Protection Program. In terms of additional information, is that something that they would reach out to you, go to your website to move that sort of exploration forward?
Yeah, I mean, if anything, any questions or any whatever after this meeting, I'm quite sure we get you my contact information. Yeah, contact me directly, because I will be the rep for Wisconsin, and so I'll be able to answer any questions, may it be on this program or any other programs that may be out there, or you just need to shoot me an email on some other questions that you have that you just need someone to give you some guidance. I would definitely try to, give you the answer if I know, but I'm always good about researching and getting back to clients, because number one, if I don't know it, I need to learn it because, someone else is probably going to ask me the question. So it kind of gives me directions on, keep me kind of connected to what, executive directors and other nonprofit organizations' needs are.
Wonderful, thank you. Just thinking about time and knowing that it's of the essence in just everyday life, but certainly as we continue to work toward tight deadlines and turnarounds, wanted to also create an opportunity for everyone to walk through the actual PPP application. It is only a 2-page document, and yet aspects of that 2-page document can be very confusing as it's written in the language of the SBA. And so looking to Darian and Jeff an opportunity, if we could just walk through potentially section by section of this is what the document is, this is the kind of information, and then create an opportunity for all of you who are on the call today, as we're going through the section, if there is some aspect of it that you want clarity on, what should go in there, where would I find that information, creating that opportunity to make it easy, because one of the things that we have been hearing over the weeks is the more complete, accurate, and thorough your application is, the more smoothly it goes through the process. And so the easier we can make this for IFF, for CRF, for the SBA, everyone after your point of application, it improves your chances of being able to turn that around quickly. And
hey,
so,
Melanie, can I just make a quick note for that?
Absolutely.
It's great that that we're going to walk through the SBA application step by step. One thing to keep in mind is that when you receive the link to CRF to set up your portal, that application is actually built within their portal. So it won't look like the application, but all the information that's out there will be captured through that through their portal, because their portal connects with the SBA portal, so all information flows through. So I didn't want you to go looking for this application. Just know that the information will be captured through once you go and log into their portal. Just a FYI.
It's an excellent FYI, and one that's actually even more delightful because it means you're inputting information once into a portal as it's trying to figure out how to adapt PDFs and other things.
Exactly. Yeah.
That's lovely. Would you like me to pull that up and share through my screen, and then we can step through? Does that, or would one of the two of you prefer that, Jeff?
Melanie, I'm set up to do it here.
Perfect.
Great. Hi, everybody. I'm Jeff Femrite. I work with Scholz Nonprofit Law, and we've been helping our clients navigate these various SBA programs for the last couple of weeks. I'm going to just share a screen with you here. As Melanie indicated, we're going to walk through the rather short PPP application process. But on our way to that, I just thought I would show you some of the materials that we have available, and you can take a look at the Scholz Nonprofit Law website to do this. We've had some feedback from some of our 501c3 clients expressing concern about, hey, what happens to us if all of our PPP loan is not forgiven? The loan program is set up, if you abide by the rules and regulations, you apply 75% to payroll costs within 8 weeks after funding, then the entire loan should be forgiven. But if you don't meet those criteria, you go take a little longer, you kind of fall out, there's going to be some sort of partial forgiveness, but not total forgiveness. And that means the part that's not forgiven has to get paid back. So I just wanted to reiterate for everyone that, if you have to pay that back, it's a 2-year term. Its maturity date is 2 years after loan funding. It's 1% interest. So it's very, very low interest rate. There's no payments in the first year. And you can repay the entire amount at any time without any penalty. So, what I did is I just did some example calculations here. Quite frankly, again, because the SBA is moving so fast on these programs, they've not yet established what their regulations are on how they're going to repay unforgiven PPP loans. So what I just did is I just applied how SBA makes you repay other loans, which is a pretty good guess of about how they're going to do it, but I don't know for sure. But you can take a look at, and I just put in a couple of examples, 30,000, 50,000, 100,000, 250,000. If, obviously there'd be no payments for the first year, but for a $30,000 loan, starting a year from now, you would have a $1,263 monthly payment with a balloon at $15,000 2 years from now. So just take a look at those to help people better understand, okay, well, what does it mean if I don't get the entire amount forgiven? The other thing I had, and I just want to really reiterate something Darian said, when he's talking about if you don't have your documentation in order, that can really be problematic. What we've done here for our clients is we put together a checklist. So when you're sitting down to work on this form, if you work through this checklist, this is going to help you get your act together, help you collect up all the information on your entity, help you calculate what your monthly payroll costs are, determine what the payroll costs are. If you work, our clients have told us that when they've worked through these, it's really helped them put their things together. This here, we're going to talk through this. This is the PPP application. We're going to talk through this, but we've only got 20 or so minutes to do that. So if you want to go back and take a look at this, these are sample answers to the PPP application questions. So you can take a look at that. And then finally, the last part of what we have on our website is a draft officer certificate. This will help you organize the stuff related to your organization and the approval. So, you know, at some point, the bank and SBA is going to be interested in your articles of incorporation, the resolution approving the deal, copies of your bylaws. This is going to help you organize all that kind of stuff.
Jeff, a question for you
Yep.
is, do you have to have 3 years of the 990?
You do not have to have 3 years of the 990. You know, I used the 3 years because I thought that would get, you know, that would give the lender some background on who you are and what your finances are like. But no, if you don't have 3 years, submit what you have. This application process, you know, to the extent that you can't kind of complete something perfectly, use a good faith estimate, and that should get the job done. So as promised, here is the paycheck application form, the paycheck protection form. And again, the two things that we've really been hearing from nonprofits, the one I talked about, hey, what happens if it's not all forgiven? So take a look at some of those calculations that I did earlier. And the other is, you know, we tried to fill out this form, but some of these questions don't make sense for us. Again, as Melanie said, things are moving very, very fast here. And if this was a normal SBA program, they would have all kinds of people who would go through these things and put together a different application for for-profit businesses and then another profit, you know, for nonprofit businesses. That just didn't happen. So we have to kind of squeeze our answers in. So just following my arrow, starting up, we're going to talk about this top box first, and this is pretty straightforward. What kind of entity are you? Most of you are going to be a 501c3 nonprofit corporation, but if you're something else, you just check the appropriate box. Then you put your legal business name here, and you know, let's just say, you know, we are Good Nonprofit Inc., a Wisconsin corporation, and then your business address here. If for some reason you operate under a different name, you have a legal entity name, but you operate under a different name, then put that trade name here. This is where you would put your tax ID number. That goes here. This is a business phone. Especially since a lot of us are working from home, this phone number and the primary contact and the email address, those should be someone who can answer the SBA or IFF's questions. If someone has a question, they want to pick up the phone and they want to talk to someone who has an answer. So this should be probably the cell phone of your executive director, the email address of your executive director, and then the name of your executive director, or whatever person is most going to be able to help them answer questions. That's what I suggest to put in here. Okay, so here's we get into the average payroll. This is where we have to calculate the amount of the loan. And again, if you go back in the worksheet, you know, we have this all broken out for you. But basically what you're going to do here is you're going to take your payroll from 2019 and you're going to divide that by 12 months and come up with, so you're going to get your average payroll costs for the year, divide it by 12, and that's going to give you a number. You then take that number and you multiply it by, as Darian said, the 2.5, and that's going to give you your maximum loan amount. Okay? You don't have to request the entire amount, but that's the maximum that you can request. And then you're going to have to put in your number of employees, and that should be your FTEs. Calculate your full-time employees, your part-time employees, and get your FTE number there. Okay? Then down here, purpose of loan. Again, This is the Payroll Protection Act. And so most people are using this for payroll purposes. And that's primarily what the program is focused on. But you are allowed to use it for other things, for lease payments, for mortgage interest payments, for utilities, for other types of reasonable business expenses. You can put down, if you're going to use it for a number of different things, keep in mind, if you want full 100% forgiveness, at least 75% of loan proceeds have to go towards payroll costs, and they have to be paid within 8 weeks of loan funding. If your payroll costs are something less than 75%, or it takes you longer than 8 months or 8 weeks, there may be some reduction in the amount that you can that may be forgiven. Okay. Moving on here, this is a very confusing question. List the owners. Well, you're a nonprofit corporation. You are a non-stock corporation. You are very likely do not have owners. So we have we suggest here where it says owner's name, just say see attached. And then on the attachment, then you attach a piece of paper to the back of this application. And in that application, you say that we are a Wisconsin non-stock corporation recognized as tax exempt under Section 501c3 of the Internal Revenue Code, and as such, we do not have owners. Okay, that should take care of that question. Now we get in, and you can see there's just really 8 short questions. These are pretty straightforward questions, and they are focused mainly on making sure that these funds are not going to a bad actor of some sort. So the first question is, has the applicant, ever defaulted on any type of federal loan, or have you filed for bankruptcy? If that is no, then put no. No should be mostly the answer. If the application has ever defaulted on a guaranteed loan or bankrupt in the last 7 years that's caused a loss to the government, again, that should be probably no.
And Jeff, I might just interrupt because I think each of these, the situation in theory would be unique for the organization that's filling them out. I think it is important, one of the key components in this section that, if you say yes to number 5 or number 6, it's already indicating the loan is not going to be approved.
Yep.
So those would be, 2 great places to start, and would just want to make sure that, again, people are clear on kind of what that would mean or how you would get at that information. It does seem fairly straightforward. If we look at coming up with that loan amount, you had mentioned at the top, you could calculate the payroll by 2.5 and then come up with the maximum number. However, you didn't have to apply for that full amount. So in fact, can that loan amount be backed into based upon the amount that you would like forgiven? For example, as was put in the chat, if your 8-week payroll costs are $75,000, rent and eligible expenses are $25,000, can you simply request $100,000 and then ask for $100,000 forgiveness after 8 weeks?
The answer to that question is yes. And again, what I would do in that instance, if you're not going to apply for the full amount, and we've had people who don't want to apply for the full amount, what I would do here is say see attached. And then go to that page that we've already created for your see attached up above, and say, here's what our calculation would be for the full amount, and then just state that we don't want the full amount, we just want something less than that, and so please consider us for a loan for $100,000. We're eligible for $150,000, but we only want $100,000. Jumping down, again, as Melanie indicated, 5 and 6, these are questions, having to do with bad actions, and these are, like, if you're going to answer yes to either one of these, you might as well just stop the process at that point. But if you answer no, remember you have to initial here that you are that you understand what the questions are and you're saying no. Question 7, and this is something that's come up with some of our clients who have employees overseas. All of the calculations, both in terms of the employee number of employees up above here and here, the only employees you get to count for this particular loan application are employees who are permanent residents of the United States of America. Okay, so if they're permanent residents, they're included. If for some reason you have operations elsewhere in the world, the employees who are elsewhere are not going to be part of this calculation. If someone is a franchise, tell you what, just give us, if you're probably not a franchise, should just say no. If you are a franchise, there are some kind of complicated affiliation rules, give us a call. All right, and then on the second page, we just have a series of certifications. And these are just, and this is basically the applicant saying that, yep, all of this stuff is true. And this is the end of the application. So you go through this and say, were you in operation on February 15th? They want to make sure that you didn't start up a week ago to take advantage of this program. You know, has the economic uncertainty made this loan necessary? Yep, that's probably true.
Are there any aspects of this certification that have been more confusing than others? Again, just thinking through, we have about 10 minutes left of our time here today, so I want to see if there are anything that you would call out specifically based upon what you've been hearing or experiencing.
No, you know, I guess the one thing, Melanie, that we do hear from time to time is, hey, we're doing okay right now, but we're not sure if this pandemic goes on a while longer, it's going to create a problem for us. In that situation, I would say go ahead and certify this. You know, the economic uncertainty makes the loan request necessary. I don't think that is an untrue statement if you're doing okay now, but worried about what happens down the road. I have no problem advising clients to go ahead and certify that. That's the one where you kind of run into people, you know, some 501c3s have better reserves than others, and, you know, are like, hey, I think we might be able to make it, but we're not sure. I'd go ahead and apply for the program anyways. Here, you're just going to certify that you're going to use the funds for what they are permitted for. Here, you're just, again, verifying the full, you know, the full-time equivalents, you know, employees, and, you know, that you're going to be using this for the various eligible costs. This is the applicant understanding that for full forgiveness, you've got to abide by that 75%, 25% calculation we've been talking about, and funds have to be spent within 8 weeks.
Related to the forgiveness and really as moving forward, if someone were to apply, just for the group to hear, if you borrow $100,000, for instance, and later have only $37,500 in payroll and $12,500 in rent, the question was, can you apply for $50,000 in forgiveness and then pay back the other $50,000? And it's coming through affirmation that you could do that, but that you'd have 2 years to pay back the remainder of the loan.
Yep.
Any additional clarification, Jeff, Salli, or Darian, that you would add to that scenario?
The one thing that I would add is a nice feature of these loans is there's no prepayment penalties. So if you are sitting on a bunch of loan proceeds that you would rather not be paying interest on, and we come out of it and things look like they're in financially, your organization is in pretty good shape, you can just prepay it and then, you know, get rid of the interest penalty.
One question that's raised is, can you use excess loan proceeds to pay for something else other than payroll expenses?
The answer to that question is yes, it can be used for other things, but it has to be used for the eligible criteria for a PPP. So you can't use it for everything. You can use it for payroll costs, mortgage interest, rent, utilities, and like health insurance costs.
But Jeff, you can't use it for those other things if you haven't used 75% of it on payroll, right? I mean, it's a proportionate.
Right. No, you can use it for those other things, but
Well,
you're not going to get forgiven.
Sorry, right. Right.
There is nothing.
Yeah, got it.
Like we would advise people to look at one of the other programs, but there's nothing that if your organization said, boy, our biggest problem is paying our rent and utilities, we got to keep the lights on here, and so we're going to use the proceeds for rent and utilities, that's allowable, but none of it's going to be forgiven, right? And quite frankly, we would tell you to apply for a different type of loan, but there's not a prohibition on that. Yeah, the 75-25% only comes into play for forgiveness.
Not seeing other questions come in at this time, and so would really like to create an opportunity, perhaps start with Darian and then go to Salli, then Jeff. What would you encourage people to take away from this conversation? What would you like to reinforce for them as they look ahead and exploring their options for continued viability?
Well, I guess I would just tell everyone, this this program is a great opportunity to get, I hate to say free money. It's an opportunity for you to get an injection of cash, number one, to keep your organization going, but number two, to be able to do it without having to obligate yourself for a future loan. Of course, there's a part that's forgiven, but if you can get 75% of $100,000 approved and you're left with $25,000 pay over 2 years, I mean, 1% money. At the end of the day, it's almost like you can't afford not to do it. Especially if it means retaining your payroll and keeping money coming into a household and having a family to sustain without incurring major debt. You can afford not to at least give it a try. That's all.
Pursue through IFF to create your own tomorrow. It's part of what I would take away from that. Salli, what would you encourage?
Two things is, first of all, I would encourage people to apply online with IFF and expect a call from Darian so that he can work with you then. So thank you, Darian. And I just want to do this I received an email from someone about the PPP program, a very, very small nonprofit, and they were reluctant to apply for it at first. And per her words is the fact that the application was actually ridiculously simple once they found a bank to accept it. But the point is that don't be intimidated by it. It really is simple. And you have people out there who are willing to help you with it. So those are my words.
It's rare that such opportunities can be so simple, and all
Yes.
it takes is looking to good advice and guidance and following instructions and creating a good package. And with a lot of the guidance that Scholz Nonprofit Law has been put out, Jeff, again, what would you emphasize or reinforce for people as they think about their next step?
Be organized. The people who are the organizations that are having success are the ones who go into their lenders, in this case IFF or whoever a lender might ultimately be, with a neat package that's all put together. The people who come in with a file full of like, okay, well, let me find this for you, and here's this straight piece of paper, they're the ones who are getting jammed up. Be organized, have your packages together.
Be prepared. Plan and be prepared, and then go to pivot. With that, we are coming to the end of our time. So thank you everyone for being here. We will close out with additional affirmation from Wayne Dyer, and I think it's appropriate for this conversation. go for it now. The future is promised to no one. So let's create our own futures and be able to use the resources that are around us. Thank you to Darian and to IFF for advocating for nonprofits and for these kinds of set-asides. Thank you to Melissa and Jeff with Scholz Nonprofit Law for continuing to provide excellent guidance and step-by-step assistance on moving these things forward. And thank you to Salli Martyniak for instigating additional conversations and encouraging everyone to make their futures and to strengthen their communities by building their own capacity. So thank you, everyone. Have a good rest of the day. Find something to make you smile and share that smile with whomever is in your universe. They will appreciate it. And go forth, be well, and apply for the PPP through IFF.
Thanks,
Thanks,
Mel.
Melanie.
Thank you.